Welcome back. You're watching Buy Now Sell Now on ET Now. I'm Cheryl D'Souza, and let's shift focus now to markets and get on board our guests for Buy Now Sell Now. We have Kunal Bothra as well as Ashish Kapur joining us this morning. Good morning, Kunal. Good morning, Ashish. Kunal, first I'll come to you. What are your picks for our viewers in this current market scenario, considering what's happening with the markets? Do you have any buy calls?
Well, yeah, Cheryl. So good morning. First of all, the markets have been very tough and volatile, but I believe that even in this market, it probably offers a couple of key opportunities in terms of contra buying or stocks which could probably do very well. So I'm trying to pick up many of these stocks. Nifty's gone back into oversold territory, so that's also one of the reasons why I believe that from a short-term basis, you might probably expect some sort of a short-term relief or a bounce. So in that anticipation, two buy calls. First is the one Pidilite Industries. I think the stock is doing pretty well for itself. It's still perched at those 52-week high level, 1625, 1630 is where Pidilite is currently trading. I believe even at current levels, it offers a good risk reward in terms of buy. Crude fall is also one of the key highlights where I believe Pidilite could also try and gain some good traction going forward as well. So buy with a target of 1700, stop loss to be kept at 1600 mark. And the second is more of a large cap stock. It's about L&T. Now, the stock has a very high correlation with Nifty as well. It's been an underperformer since last 1.5 odd months. But I believe that, at current levels, L&T just around that 1000 mark, 1090, 1080 mark, I think it's, good risk reward to, go with fresh long positions over here. Would suggest about L&T with a target of 1140 approximately and stop loss to be kept at 1060.
Thanks for that, Kunal. So, Ashish, there you have it. Kunal seems to find some opportunities even in this market. What's on your agenda today? You have any stocks that you'd like to highlight for us?
Well, I agree that there's kind of a panic in the market, but usually these panics do give very nice entry opportunities. So as long as you get the stock selection right and have a reasonably long-term holding capacity, then I think this would be a great time to do stock picking. The two stock ideas which I have today are, one is L&T Technologies. Now, clearly, technology is a space which is kind of, in many ways, saved from the mayhem which we are seeing on the economic side. That apart, this company is doing very well because it's focusing on two major things. One is automation, and second is the Internet of Things. Now, in both these space, they have carved a very strong niche for themselves. The order book is very strong, and the execution capacity is very good and proven over the last few years. This, and apart from the fact that they have a debt-free status, which again is very strong and very strong financial parameters. So given all that, we have a target here of 2000, which is a significant upside from the current levels, and it's fairly safe because it's an IT sector, so it doesn't really is not going to be really impacted by the economic slowdown which we are expecting the world over. The second is an industrial stock, which is KEI Industries. Now, the reason for choosing this is that the power demand and the power usage is really going to go up in this country with the kind of electrification which we have seen. And so KEI is very well positioned to take advantage of that. The company has been doing very well. Their revenue and profit growth has been 21 and 50%, has been 50 and 21% respectively. It's very strong, and their company enjoys very strong return ratios, return on capital employed and return on equity of as high as 34 and 30% respectively. So that company is being well managed very well. They have a very strong order book. So despite all the industrial slowdown, the correction which we have seen in this stock should be used as a great buying opportunity, because I think going forward we have a target here of 600, which represents a fairly good upside from here. And more than that, I think over the next few years we expect this stock to really continue doing very well. So this is a very good long-term capital creation idea.
All right, thanks for that, Ashish. And without further ado, let's get this show on the road with our first caller. And we have P. Saxena calling in from Patna. Thanks for tuning in. What's your query?
Good morning, sir.
Good morning.
I have 40 shares of Britannia Industries at the rate 1878.
Okay.
I want to add further Britannia shares, whether I should go on with it or not.
Okay, sure. So let's get you the technicals first. Kunal, you heard the query. What can you advise Mr. Saxena?
So I think on Britannia, I think it's a good buy, and since you've bought at a a price which is below those 2000 levels, so almost you're making more than 50%, 60% on your investments, I think it's a stock which you should continue to hold. FMCG overall as well, we've been discussing time and again that how these stocks or the sector manages to come out and act as more of a shield, when the markets are going through a bit of volatility. So assuming that even if the next, 6 months to 1 year, if this market remains, more volatile and slightly towards a downward drift, many of these, FMCG stocks, they should continue to do pretty well. Britannia, in terms of charts as well, has good supports at 2900, 2950 on the slightly shorter term time frame as well. So I believe, you should continue to hold on to Britannia if your time frame is long term.
Continue to hold on to Britannia if the time frame is long term, is the view coming in from Kunal. Ashish, what's your take on Britannia, company which is actually made its entry into the Nifty? If you see the longer term trend of the particular company, definitely has performed well in a 3 years or 5 year time frame. So what would you advise our viewer to do?
Well, I think one of the safer stocks to be in, so certainly stay invested, because the demand for these kind of things doesn't really dry up, even if the economic slowdown, which we are anticipating, does take place, and even if it continues for some more time. The second thing is, of course, Britannia has ramped up its distribution and branding very well over the last few years. The growth is more or less, secular in nature, so it doesn't really going to get affected by any other, parameters which we might discuss. So that way, Britannia, very good, solid growth story going ahead. They're ramping up, and their branding has been very good, very excellent, and a kind of a case study for other companies to follow. So I do not see any reason for him to panic. He's making money. Just stay invested. And if this stock does correct due to the overall crash in the market, use that as an opportunity to try and add more if you have money available for the long run. Otherwise, just stay invested. I don't see any reason why you should panic or try and shuffle out of this stock.
Sena, that's a thumbs up coming from both of our experts for Britannia. Mr. Ashish is of the view that there is no need for you to panic. You're actually invested among the safer stocks, and if the particular counter dips on back of market correction, then you can use that as a buying opportunity. But Mr. Saxena, you had another query?
Yes, ma'am. I have two shares of Whirlpool of India Limited at the rate 1989. I can hold it for another 2 to 3 years. What is its future prospect?
All right. Whirlpool is the stock. Kunal, what's your take on Whirlpool? Our viewer has about 19 shares of that particular counter, which he's bought for 1,989 rupees per share. Definitely a stock price a bit higher than his buying price. But how are the charts looking for Whirlpool?
I think even a very similar sort of a chart. It's been doing exceptionally well on long-term basis. Goes through multi years of upside, and I would say multi quarters or few quarters of correction or sideways price range, and then it tends to come back into the thick of things. So I think in the last 1 month, 1.5 odd month as well, as we've seen for many of these other mid-cap names, I think Whirlpool is also going through a bit of a correction phase, but this is more of a correction rather than more of a price reversal. At least on the charts, the indications are still positive for Whirlpool. I would advise a hold even at current levels.
All right, thanks for that, Kunal. And Ashish, what's your take on Whirlpool?
Well, one of the better white good manufacturers has a good presence, good distribution. The stock also has been doing fairly well over the last few years. Again, I think despite the slowdown, I think the leaders in each segment continue to do well, and Whirlpool clearly is the now established leader in the washing machine segment. So I do not see any major reason. The investor has 2 to 3 years, so I think should bear out, and I think in 2 to 3 years time frame we should see a rate much higher than the current one. So I would say stay invested and do not worry.
Ashish, so consensus thumbs up as well for both these companies, as long as you time your entry and exits wisely. I hope your queries have been addressed, and we'll now move forward to our next caller. We have Vedadri calling in from Bangalore. Hi, welcome to the show. What's your query?
Hello. Hi, I am Vedadri from Bangalore.
Hi.
So right now I am holding HDFC Bank and L&T.
Okay.
So HDFC I am holding 500 quantity at the rate of 1239.
Okay.
And L&T at 300 quantity at 1329. So I am holding from last 1 year. What will be the long term now? It is falling down. Is it a good time to buy, or will it fall further to buy? And I am a long term investor. I can hold it for 2 to 3 years. And one more quantity, RIL. RIL today cracked down 10%. So is it a good entry point to buy, or will it fall down further?
Okay, so I don't know if we can address all your queries, but let's get your first one addressed first, which is HDFC Bank. I can just tell you off the top of my head that right now it trades at a considerable discount to its typical multiple. So it is quite a wise entry point and quite a consensus opinion in the market. But Kunal, how's the chart on HDFC looking for you right now?
I think he was talking about HDFC and not HDFC Bank. I think that's my assumption, or that's what I heard. Now, irrespective of both of these names, I think since you've bought at a lower end, I think you should continue to hold on. These are very, very top quality names, and yes, these stocks are also going through a bit of selling pressure. So that selling pressure may probably continue, over the medium term, assuming the market conditions remain volatile and the global situations remain more or less a bit iffy. So I think in that regards, this volatility would continue. But then if you have a long-term plan and you are very, very clear on it, then I don't see a reason why you should try and panic or probably look at your investments with an attitude where you are looking to book profits. I think all the three stocks which you mentioned, L&T, HDFC, and assuming if you're looking to buy Reliance as well, I think all these stocks have withstood major parts of the storms in the last, I think, decade and a half of their price history, and I think that's more solidity. That adds more solidity to your portfolio. So I think for HDFC particularly, I think at current levels of 2000, I think it's a very good buy. If you're looking to average further, bring your, bring more quantity to your portfolio, I think it's a very good price. Even for Reliance Industries, the stock has almost retraced the 2019 gains from 1100 to 1600 and back to those 1150 levels. So I think again, for an entry point, I think these are classic entry points for many of these stocks. But just one word, into many of these stocks, that when you see a sharp correction, the real bottom, even if it's a short-term correction, could probably happen after a couple of months or a couple of weeks. So in terms of price level, there could be better price levels for many of these stocks. But then you, as a long-term trader or as a long-term portfolio, you should never time the stocks to perfection. Buy on stages or buy on dips is what I would advise for many of these stocks which you're looking to purchase.
All right, Kunal there answering all the three stock queries, but definitely saying there is a classic entry point, and do not get worried with the dip in the stock prices. Don't try to time it, is the word coming in from Kunal. If you want, you can buy in stages. Ashish, what's your take on HDFC Bank, L&T as well as Reliance?
I think all three are blue chips, no doubt about it. But I think regarding HDFC Bank, I think the clear the change here is the change in leadership which is going to happen towards the end of this year. So although this has had a great track record and it's a great stock to own, but I would say that yes, stay invested, but do not buy more at this juncture, because there could be some more selling pressure, because usually when the top leadership changes, the company and the stock goes through a period of consolidation and perhaps even a deep correction. So I would not necessarily buy more at this stage, despite the correction in HDFC Bank. I would wait till I think the new leadership comes in place and we have more clarity on the way forward. Certainly a great blue chip, stay invested, nothing to panic, but do not buy more at this stage. That's my advice on HDFC Bank. Regarding Reliance, I agree that this correction, which is very sharp, could be a great entry point, and ultimately you could buy in a staggered way starting today. Today itself we have seen a very big cut, so perhaps the bottom is not too far away. So in a staggered way one can start buying. Regarding L&T, again, I would like to hold because although the stock has corrected, but the company itself has not been really doing very well. Most of their new projects haven't really taken off, and also the company has indirectly a very big exposure to oil, because a lot of their new projects are in the Middle East. So yes, again it has corrected, but I would still wait for some more time before start nibbling in this. All three are blue chips, stay invested, not to panic, but buying can only perhaps start in Reliance at this stage. The other two, I would suggest you hold on for some more time.
All right, that's the take coming in from Ashish for HDFC Bank, L&T as well as RIL. For now, you can hold on to your positions in all the three stocks. And on that note, just hold on with your views, Ashish and Kunal. We'll take in a short break on this edition of Buy Now Sell Now. We'll come back with more stock questions.